Everybody. So George Moorhead with Bentley Properties. We've had gobs and gobs and gobs of questions from buyers and sellers that we've been answering, based on the last few videos, and they're wanting to know, hey George, what's going on? Asking different questions based on the different perspectives, whether it's a buyer or a seller. So what we did is we took the questions that were most frequently asked, and so we went ahead and wrote them down, and I'm going to give you some interesting metrics for you to consider. So Jeff asked, what is the best time of year to sell your home? Okay. I know that we talk about the different seasons. We talk about kind of the spring market, then we talk about the, just before summer, where kids are starting to get out of school, or what we call the school cycle. Even though I understand everybody doesn't have kids, but still the cycle is still there. Then we have our summer market, and then we kind of have a little transition period, just before school picks up again, and then we're, just before the winter market. So there's, it's kind of that little cycle that we see every single year. So statistically, and I was going to pull up some charts, but then I thought, that's probably going to get a little much. So let's just keep it simple. All right. So the highest level of activity is between February and March, as far as our spring market comes in. And that rolls into, I shouldn't say the highest level, the start of the highest levels is in the February to March market time. All right. The highest levels really are March and April. And those are the times in which the greatest number of homes actually come on market. And of course, that is also the time in which we see the greatest number of buyers entering into the market, which is kind of surprising in and of itself. As far as new market peak, statistically, when we take a look, and I went back actually 5 years to make sure that my numbers were correct. Statistically speaking, May and June, or July and August, that's when we're going to see the greatest number of new listings coming on market. Now, what's interesting is we see the greatest number of pending sales, or where a buyer and a seller agree, that actually happens in our spring market. So that February really through April, as that curve starts going up, that is when we see the greatest amount of buyer activity. And then, of course, it starts to fall off towards the rest of the year. So it's interesting that the cycles are just a tad bit different. As far as the number of pending sales during the summer is 20% less than it is during the spring market. So the number, what that means is we have 20% more homes going from active status to a pending status. We have 20% more in our spring market than we do during the summer market, and then of course moving down from there. With that, September and October, typically that's going to be your next best opportunity as far as the post-summer, because then our winter months actually start to fall off. And when I went and looked, we actually only have about 38% of the number of homes coming on market as we do during the spring. So in other words, the winter market has 62% less homes coming on market than they do during the spring, which makes sense, right? And we saw that last week. We saw the number of homes that actually were coming on market, but yet our sales are a little bit more imbalanced. And for a seller, really, that's actually a really good time as far as to consider, because you have less people through your home, but the people that do come through are more qualified, they're more motivated. So that's something to keep in mind. So really, to answer your question, the best time of year for a seller to go on market is between the February and April. For a buyer, if they are more price sensitive, then you need to wait more towards the summer, because that's when the number of homes coming on market starts to wane, and that's when buyer activity starts to wane, and that gives you more options, which means that you're also looking at less competition. Okay, next question. The next question is, what do you expect from home appreciation this year? I love this question. I get it every year. All right, so today I broke out my crystal ball polish, as I do every year, and started to, we monitor the metrics every year. So with that, I'm going to break it down into a couple of different areas. In the Seattle East Side area, the really anything below $1 million is the sweet spot for Seattle and the East Side. All right. And we are going to see a frenzy of activity. I should say a frenzy, but we're going to see increased activity this spring, because we went from, our peak last year, we're about 2.3 months of inventory, down to 0.9. We're not even 1 month. And we drew down that inventory because it was based largely on interest rates. Interest rates came down, buyers came out, saw a lot more active to pending to sold homes. All right. So with that, we're anticipating a 6 to 8% appreciation of homes below $1 million in the Seattle East Side areas. In South County and South King County and Snohomish County, you should anticipate seeing 5 to 6%, and that's going to be below the $500,000 price point. So $500,000 and lower, you're going to see roughly about 6%. If you're between $500,000 and $750,000 in South King County and Snohomish County, you're in that absolute sweet spot. So you're going to see probably about 5.5%, maybe even as high as 6%. But the challenge is that our inventories are, well, they're a little bit higher than the other areas, but we are starting to see people start to gravitate closer to work centers and things like that, so that those areas of infill that are closer to where they work, those areas are starting to see a lot more demand. It will start to push out, but I still feel that we're going to see a little bit more demand on the core areas. Let's see here. For Pierce County, we're looking at things a little bit lower. We're going to look at 4 to 6% for appreciation for 2020. All right. 2020 gives you clarity, right? Anyway, so the next question we had was, why are we seeing lower inventory rates? All right. So we have what's called the real estate catch-22. The real estate catch-22 is where a seller, when they look at putting their home on the market, they have two concerns. The first one is, what if my home sells and I don't have a home to go to? That makes me homeless. Or what if I put my home on the market, but I find that perfect home? Now I have this cost of supporting two home values, which could potentially create a financial hardship. So they kind of vacillate back and forth and back and forth. Oh gosh, what should I do? What should I do? And that's again why when you take a look at the buyers most aggressive in February through March, you see their activity come in, and then the sellers that look at that have had reservations that they've been holding back out of concern of finding that next home. They're like, oh, okay, so let's do this, and then we're going to really go out and look. And then they're putting their home on the market, but after they say, hey, is this going to be a good market? And they kind of come in a little latent to the process. That's why the March and April, we see a large number of homes coming on market, which then, of course, helps to feed that spring market for the buyers. All right. A concern for sellers. There's other ways of overcoming it. We'll chat about that a little bit later. But just keep that in mind. That is why, because if we don't have homes on the market within the Northwest MLS, then you have to look at other options. So like we have an off-market seller program. So for buyers, if you're interested, let us know. There's other options as far as, for sale by owners, which can be a little bit trickier since they also tend to charge a little bit more, shockingly enough. So with that is going to have a huge impact on what our market is going to do. Are we going to see multiple offers? Are we going to see more homes coming on market? Are we going to see a balance of our inventory? Because remember, a healthy market is 4 to 6 months of inventory. We're at 0.9 months of inventory in Pierce, King, and Snohomish County. So keep that in mind as you are considering going on market, because really coming on market within the next couple of weeks would absolutely be in your best benefit. So, and in fact, one of the other questions somebody asked is, George, as far as should I buy within the same market? Should I sell my home and buy? I'm really concerned that, gosh, if I sell my house at this higher rate, that means I have to buy a house at a higher rate. Yes, that is true. So what we call the equity balance is going to be the same when you're buying and selling within the same market. But the same thing happens in a modest or a slower market. You're going to be looking at a slightly lower price, okay? And you're going to be looking at a smaller purchase price, all right? So it's a balance, and it's just a choice. It just balances out. So buying within the same market time is not a bad thing. You just need to be able to understand that you want to make sure that either you are timing it correctly, and you have a clear understanding of what you want to do and where you want to go. All right, let's get on to the next one. George, what are the key factors to watch when deciding to buy or sell? So I think what John was trying to get at here is, what should he be watching? And John is a seller. What should he be watching as far as market trends? There's really 3 market trends that we want to pay attention to. The first one are jobs. Are jobs still coming in? Is our unemployment, is our job stability still, in a what we call a growth pattern? Remember, if you're not growing, you're going backwards. That's all there is to it. There's very little stasis. There's very little standstill. You're either really on one side or the other. Okay, and that's one of the first metrics that we actually take a look at is, what is our job growth? Are we continuing to grow? Even if we're slowing, are we still growing? All right. The second one is going to be interest rates. And as we take and we monitor interest rates, remember, interest rates for mortgages are not based on the Fed rate. The Feds, they deal with your credit card, your car payment. If you have a home equity loan, that is the rate. A commercial loan, that's the rate that they affect. Residential mortgage rates are based off of your 10-year treasury or your mortgage, your bonds. And when you watch those, so here's an example. When Iran recently sent a couple of missiles over to Iraq, immediately the investors, and we're not talking about you and me investors, we're talking about the big boy stock boy investors, started pulling out of the stock market and going into a conservative vehicle to invest in, to ensure that they didn't see a loss, right? And so what that did is as the stock market saw a lot of negative volatility, they pull out. That means that the treasury and the bonds actually improved, which means that dropped rates just a little bit. So we saw about an eighth drop in rate just this last week. Okay, that is what you need to watch, because that is one of the determiners of what mortgage interest rates are going to do and where we're going to see things as far as projecting into the future. 2020, I think we're still going to see for 20% down, 30-year financing. You're still going to see something around 3 3/4, which is awesome. It's an amazing rate, and it's going to adjust there. For condos, townhomes, if you're doing 4 units or less, multifamily, you're going to look at, there's an add-on, and might, depending on rate, term, credit score, blah blah blah, but look, anticipate about a 0.25% add-on to the rate for that. All right, that's just a generalized number. Okay. The third one, months of inventory. So our inventory levels are also going to be the third metric. So right now we are seeing 0.9, not even 1 month, 0.9 months of inventory. That is a indicator that, again, our market is going to be a little bit more aggressive, probably see some spring market, multiple offer situations, things like that. So you need to make sure that you're geared up and prepared financially and everything else that a buyer needs to prepare to, which is the next question. How can I best prepare to purchase my first home? Great question. One that we get actually all the time. One that we work with buyers all the time to not only mentally, but financially, because it's a big step. It's a huge step. And it can be pretty scary. If you think buying a car is scary, wait till you buy a home. Now, are there ways to mitigate that anxiety? Absolutely, without a doubt. Follow these simple instructions and your stress level will be 1/3. Okay, now I can't remove all of it, but if you do these things, we will reduce your stress level significantly. Even if you own a home right now and you're saying, George, I want to move up to my next house. All right, A, get pre-approved. Okay, not pre-qualified, pre-approved. In fact, better yet, get underwritten. Go all the way through the process. If you need a lender that does that, I'll have Marie post this. There are 3 lenders that we highly recommend. They will take you all the way through the underwriting process. Most lenders won't because there's a lot of paperwork involved. There's a lot of time and energy involved. And they're like, well, buyers, they're constantly shopping us, and which, okay, to a degree, I can see that making sense. The however is, most of the time, when buyers shop rate, even up until the day, that, I'm going to do this last minute, even, just before, quote unquote, they draft documents, right? It's foolish because you're not doing what you need to do, and that is to be focusing on making sure that process goes as smooth as possible, because you many times are less than a 16th. And if the average home ownership is, 15 years or less, most of the time, it is a foolish endeavor. Pick your mortgage person, make sure that you've interviewed who you want to, select that person, and then work with them to get best pricing. There are things you can do to get best pricing. It could be improving your credit score. It could be, putting, 5% more down. It could be any number of things to get you that better pricing. Many times, there's a little bit of adjustment, not a lot. If you find a better rate, come to your lender and say, hey, you know what? Here's something that it was given. Can you match this? And they might not be able to match it all the way, but they might be able to meet you midway, which again allows you the assurance that because you're already underwritten, gives you the assurance that you're going to close and you're not putting your earnest money, which could be $10, $20, $30, $100,000 at risk, which is absolutely what you don't want to do. All right. Let's see here. Oh, we're still on the how do I get best prepared? All right. Understand clearly what you want in a home. Make sure that you've defined what you need versus what you want. What the wants can be a negotiated, okay, I can give and take on these, but my needs are here. And make sure that you're planning for the future, that you're not planning for today, that you're planning for what are you going to need tomorrow? Are you going to have more children? Are you going to have family coming in and living with you? Things like that. Will I need a home office space? Do I need something that is going to allow me to do my hobbies? Whatever it is that you're buying for what you need tomorrow, not necessarily today. Then you'll have a very clear understanding of then where am I willing to consider. Schools hold one of the greatest desires of purchase, being near the best schools. Go to our site. It's free. It shows you all the best schools, and it also shows you what homes are within those schools. It's free. There's no cost. It just shows you what is available in the best schools, which is, again, another consideration. Start acclimating. The key thing is acclimate to your payment. Absolutely acclimate. What does that mean? That means, again, if you qualify for $3,000 a month, and right now you're paying $2,000 a month for your rent, take that $1,000 and automatically put it into the account where you're going to have your down payment. Just start putting it there. Start living off of that payment amount that you're going to ultimately be paying for, so you can adjust to it. It's no different than if you run off the dock and you jump in the water. At first, it's cold. Just like when you first start making that, might be a little painful. Might have to, maybe not go out to dinner as frequently. Maybe it's not getting that latte every single day and things like that until you acclimate. Because after you're in the water in that lake for a little bit, all of a sudden, it's not cold. What are you talking about? Then somebody else jumps in and they scream, it's cold. And you're like, it's warm in here. It's great. Come on in, right? Anyway, unless you're evil like me and it is cold and you tell them to come in because it's warm. Because, you know, misery loves company. Anyway, just kidding. All right. Let's see here. For sellers, as you're getting ready, understand it takes 3 to 6 months to get ready, both mentally and to get your home prepared. You need to get tips on what to do, but really more importantly, what not to do to best prepare your home for sale. It allows you that opportunity and time to make sure that you're making the best business decisions. There are a lot of people that will make improvements to their home in areas that they will not get a dollar for dollar return. They'll get 50 cents for a dollar they put into it. Whereas they could have done other things with that same dollar and had a better return and a better impression of what buyers actually are looking for in the market. So don't try and second guess. Come to a professional and take a look and get feedback. What should I do? What's going to get me the best net return? What's going to give us the best impressions to the buyers coming on market? Those are the questions that you need to get answered, and you need time to do it because contractors are busy and they're getting busier. We had 15 requests for different contractors, and a lot of these guys out because they're good, right? They're out 3 weeks. You need to plan for that. So again, it takes 3 to 6 months for a seller really to kind of get geared up to get their home on market. Now, there are folks that can do it tomorrow. All right, well, that's fine. You probably started preparing not knowingly, and not, maybe not, consciously, but subconsciously you started getting things ready. Which reminds me, next week, we're going to see some single-digit numbers according to the weather department. Make sure you take the hoses off your hose bibs. Number one big issue. Make sure that your gutters are cleaned out and that they are not chock full of water, because as they freeze and as they start adding more to it, they sometimes, well, yes, fall off your house because of weight, or they get damaged. It can back up into your roofing, which starts to damage your sheathing. Make sure gutters are cleaned and that things are flowing. Do that this weekend. It's going to be a good weekend to do it. Take your hoses off your hose bibs. You can get those little hose bib covers. I call them little house boobies, and you just put them on. They're a couple of bucks. You put them on, and it just ensures, because as we start to get down to these sub temperatures, it's going to have an impact. Go around your house. Just make sure that all of your window seals and your windows are operating and they're shutting correctly. If you need your furnace service, go to bentleycontractors.com. Make sure that you're doing that, because the colder weathers put the largest stress on your furnace as it's trying to overcome the outside ambient temperature, okay? And it is not uncommon for water heaters and furnaces to say, I'm done. If your furnace is 15 years or older, understand that is a blessing, and you really need to have it serviced, because every day that you wake up and it's working, you should say thank you. All right, moving on. We had a final question. Are there any other areas we can find homes other than the MLS? That's kind of ties in up above. All right, the answer is yes. There are other areas for you to take a look at. Most do go on the line within the Northwest MLS. The however is, if you're interested in off-market homes and off-market sellers, we do have many off-market sellers. These are sellers that say, George, I really want to sell my house, but I really don't want to put it on the market. I don't want a bunch of people parading through, things like that. I want to keep it a little more confidential, a little more private. Yes, there's a process. No, you cannot be working with anybody as far as another agent, as far as, under a buyer's agreement. We do not violate that rule. That is an ethical rule with us. If that changes, you can reach out to us. But yes, we do have off-market sellers. If you're a seller and you're saying, George, I want more time to sell my house, I don't want to have to do the typical upgrades that sellers have to get their home ready. Yes, I would like to know how much I would have in my pocket at the end of the day, plus get tips on what to do, but what not to do to best prepare your home. Most important one, it's safe, because you get more time. So you don't have that real estate catch-22 issue that a lot of sellers deal with. If you're interested in that, give us a quick call, email, shoot it up there. There's no cost to hear more about this program. It alleviates the real estate catch-22. If you guys have any questions, please post them up in the corner. Let us know. We got a ton of feedback on the last 2 videos, which was awesome. And again, we lead with generosity. There's no cost. There's no obligation. Go to our site if you want to take a look at schools. Say you're interested in homes around Mann Elementary. You can see what's around Mann Elementary, what homes are available. It's on the site. Let us know. And if you want a link to it, we'll just fire it off to you. It's no big deal. It's a customer service that we provide for you guys. Make sure you pull your hose bibs off. Make sure your gutters are draining. Make sure your windows are still there. Not still there, but sealed. And then also check your furnace. Make sure if you haven't had it serviced, service it. Change out your filter if you haven't done it, because it's going to get cold. And this is where people tend to run into problems. So we want to make sure you're taken care of. In the meantime, you guys have an absolutely fabulous day. Thank you for all the questions. Hopefully this answered your questions. The spring market, buyers and sellers, is absolutely the best. It starts to wane after that. And the same thing with home appreciation. You're going to see the spring market with the greater appreciation. The summer market into the winter market, you see a lower appreciation. It's just a given. It's the way it is. So if you have any other questions, again, my name is George Moorhead. Like my page, share my page, and I'll see you guys on the next one. Take care.